Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the Special Agent Halloween edition of Pasture to Pin, a bi-weekly series from the EverAg Insights team. Each episode, we bring you news and updates on the markets with the intention of helping cattle producers manage their risk. I am your special agent host, Michael Todd Rowen, coming to you from a secret location in the Texas Panhandle. Before we get rolling, let me timestamp this episode. Today is Halloween 2023 at 3:07 in the afternoon. Today, I am once again joined by my co-host and teammate, Mr. Trey Freeman. Trey, happy to have you here, sir.
Good to be here again, MT.
Before we get into the market discussion, let me kick us off with weather and pasture conditions. This weekend brought some wintry precipitation and cold temperatures to most of the central United States, improving pasture conditions in Kansas, Oklahoma, and Texas. The 7-day forecast looks promising for showers in the Corn Belt, on the Atlantic coast, and in the Pacific Northwest. These rains will be very welcome, especially in Washington, Idaho, and Oregon, as they have had a little improvement in pasture conditions since our last episode and have been dealing with drought for a good portion of 2023. In between this episode and our last episode, we had a cattle on feed report published as of Friday, 10/20. The on feed numbers as of October 1st was 100% year over year. Placed in September was 106% year over year, so a plus 6% in the placement category, and the marketed number for September was at 89.4% year over year. Trey, given the actuals compared to the estimates and the year over year comparison, we had a pretty stark futures reaction on Monday, 10/23. Will you take us through that, please?
You bet. Well, initial reaction, managed money perceived it as a skunk in a rat hole. Davy Crockett has met the Alamo type scenario. So we saw managed money dump 20,000 contracts in the latest CFTC Commitment of Traders report. That is from 83,000 down to 63,000 in 5 trading days. We found support in December right on that 38.2% Fibonacci retracement from contract low to contract high. And now we've entered the gap from that nasty Monday a week ago. Charts like to fill gaps, so a close above that 184.42 at the top of the gap in December would be friendly to higher prices. And feeders, we've seen over a 50% retracement in contracts across the board. In January, we have 2 gaps above, one around 250 and the other around 242. These will be resistance moving forward. Now, on the previous episode 2 weeks ago, I mentioned fats could have another $10 break lower and feeders another $15 before a long-term chart really begins to have some serious warning signals. We entered that area. We found footing. It's crunch time now. December fat cattle need to close that gap above and have consecutive closes above it at 184.42. Moving forward, what I'm looking at on the board, keep an eye on February fats. The Goldman roll starts next week as funds exit their December longs and by February. Hopefully this can be the spark for higher prices.
Sure thing. Thank you, Trey. It's always crazy when you see the 20-day moving average cross the 50. But for both feeder cattle and live cattle, we saw the 20-day not only cross the 50, but also the 100-day moving average. I completely agree with you. I was looking maybe for the 220s, but I do think we found our footing here in the 230s for feeders and 180s for live cattle. That just feels right to me. And to add to what you're saying, our longer term momentum indicators are in oversold territory. So again, we've got some room to move up here. From a cash perspective, the CME Feeder Cattle Index 7-day average sits at a small discount to futures from 10.20 to 10.27. So Friday to Friday, the index fell $7.03, falling from 243.56 to 236.53. So not a stark move like what we saw in futures, but a more gradual move lower. The biggest move lower was actually seen on Friday, 10/27. That saw the index lose $3.20 to get it to that 236.53 mark. Live cash cattle, however, came in at a high of 186 in the north and a high of 185 in the South last week. So live cash cattle did not pull back as hard as futures did either. Trey, looking at this September cattle on feed report, did we miss much? Did we miss something here? Because as of September 1st, we had on feed at 97.8% of last year. We had placements at 94.9% of last year and marketed at 94% August to August. I mean, admittedly, I was a little surprised to see futures move so low so fast. I did fall in the camp of some sort of price correction lower, but that was mainly due to the rising interest rate environment rather than a surprise cattle and feed report. We have said it time and time again on the show, feeder cattle are expensive. Tacking on 8 to 10% interest on top of the market makes them even more expensive. Trey, what, just kind of the shift in the coffee shop talk here, what are you hearing from producers, from prospects, from bankers? What are they making of this recent move down in the cattle complex?
To your point, the interest rate conversation has come up a lot. Everybody, I mean, there's so much risk. You know, this winter round of cattle coming around to start off like this. It's that interest rate. Those interest rates are could be killer. We're at historical high prices still. I had a friend in Indiana say to me the other day that Davy Crockett killed many a bear, but he did meet the Alamo. Is that coming up? I don't know. Is this it? I don't think so personally. We're still at historically tight numbers. Demand remains strong, but there's a ton of risk out there, and rate only makes that exponential as far as where they are now.
Thank you, Trey. As far as on my end, truthfully, a lot of producers seem to be waiting for a move like this. There are varying opinions on the report. Okay, we missed by 6% in September, and then this report was 6% over what we expected. That math seems okay to me. There's not a lot of outrage out there. Again, to a certain extent, this was expected. But truthfully, there's been some prudent coverage. There's been more analysis as far as targeting break even or seeing where an operation is profitable and attacking either of those numbers. So good conversations out there, good insight, and good information to help us kind of make sense of this move lower. That is a wrap for this episode of Pasture to Pen. Thank you to all of our viewers for watching this episode. If you have not done it yet, hit the like button, hit the subscribe button, and click the bell to be notified of future episodes. A big thank you to Paige, Corey, Hattie, and Lexi, as well as the entire EverAg Insights team for making the show a reality. Happy Halloween, and until next time, stay safe, pray for rain.